What's going on, everyone? My name is Andrew and welcome to Real Estate Basics. Today we are going to continue our discussion on how owning real estate can save you money. Now, I will preface this with I am not a CPA. This is purely for entertainment purposes, and I strongly urge you to seek advice from a licensed professional. So today we're going to talk about tax advantages when it comes to selling a home or a rental, by covering the 2 out of 5 year rule, commonly referred to as Section 121 exclusion, and the 1031 exchange. So the 2 out of 5 year rule: if you lived in a house for 2 out of the last 5 years and you go to sell, some of your profit will not be taxable. If you're single, that's up to $250,000 in profit. If you're married, it's up to $500,000 in profit. Now, this must have been your primary residence. Now, this can be extremely powerful. As an example, where you can buy a home, live in it for 2 years or so, and you bought it with an owner-occupied loan, meaning you used no or a low down payment, and then you decided to rent it out for 3 years. And as long as you sell it before that 5th year is up, you can potentially not pay taxes on your profit. Now, there are some exceptions to the 2 out of 5 year rule. For military personnel and certain government officials while they're on official duty. There are very specific rules about this where they can defer the 5-year requirement for up to 10 years, effectively making this a 2 out of 15 year rule. But if you are planning on going this route, I highly recommend you talk to a CPA to make sure that you actually meet the requirements to do this. And a PCS move, like a permanent change of station, I don't believe that meets this wicket. Now, there are also partial exemptions. So let's say you bought the house, you lived in it for about a year, and then some unforeseen circumstance came up, causing you then to move before that 2 years is up. You can effectively have a ratio of the time that you were there out of the 2 years, and that ratio will be applied to the limit of capital gains tax exemption that you're allowed to take. Again, I highly recommend you consult with the CPA if this happens to you. Now, the 1031 exchange. This is a like-kind exchange. It comes from Section 1031 of the IRS tax code. So why would you do a 1031? Well, maybe you have a rental that isn't performing very well. Maybe the cash-on-cash return is, 6 to 8%, and you found another rental that the cash-on-cash return would be 20% and would cash flow significantly more than your current rental. Well, unless you want to go ahead and pay the capital gains tax and the depreciation recapture, assuming you've been writing off depreciation for this rental, you can use the 1031 exchange to trade that old rental for another rental or even multiple rental properties, allowing you to defer the capital gains taxes and depreciation recapture. Keyword defer. You are not eliminating your capital gains taxes like you are with the 2 out of 5 year rule. Now, 1031 exchange only applies to a rental property. You cannot 1031 exchange your primary residence. So some stipulations. Again, it must be a like kind exchange. Now, the definition is pretty vague, but it is generally accepted that you cannot exchange your primary home for business or other rental properties or vice versa. It has to be some kind of investment, whether it be a business for rental properties or rental properties for business, something that is an investment. Both of these properties must be in the United States, and the cost of the new properties must exceed or equal the entire sales price of the old property. Now, you could trade this one old property into 3 new properties whose combined value then must be greater than or equal to the old property. But if the new property, the value is less than what you sold the old property for, you will then have to pay taxes on the difference, and this is commonly referred to as the boot. Now, there is a limit of exchanging one property into 3. However, you can exchange that one property into more than 3 as long as the combined value of the multiple properties you're trading into does not exceed 200% of the old property. And from the day of closing of the old property, you have 45 days to identify the replacement property or properties, and you have 180 days to fully close on that new property or properties. And lastly, you must use an intermediary, meaning that when you go to sell the old property, that money will never touch your hands. It will never go into your account. Instead, it goes into a third party's hands in sort of an escrow limbo state, and they will then forward that money on to the new properties when it comes time to close on them. And it is usually recommended that you hold on to your new properties for at least 1 year to meet the intent of Section 1031. So, quick example. Let's say you bought a single family home as a rental, and 3 years later it's worth $150,000 compared to you purchase it for $100,000. Well, maybe the cash flow on it isn't that great, but it's gone up in value. So you could sell it to recapture that capital to then use further on down the road, but now you're going to pay long-term capital gains tax on that profit, which comes out to about $7,500. And you'll have to pay depreciation recapture tax, which isn't even factored here. But that doesn't sound very fun. Instead, we're going to use a 1031 exchange to get 3 replacement properties, as long as their combined value is greater than or equal to $150,000. In this example, combined value of $300,000, let's say 3 years later is a pretty good market. The 3 of them combined are now worth $500,000. You could then 1031 one of them into, let's say, some multifamily buildings. And you can continue this cycle, so on and so forth, until the day that you die, ultimately deferring the long-term capital gains and depreciation recapture forever. You won't have to pay those long-term capital gains tax or depreciation recapture until you go to sell one of those properties without doing a 1031 exchange. That's all for this one. If you enjoyed this content, please like and subscribe, and until next time, take care.